Joining us now to share his commentary on the day's market performance is Aheesh Singh from MP9 Asset Management. Aheesh, thanks so much for your time today. As I mentioned at the top there, global stocks are heading for their worst week since April. But when looking at US futures, they're in the green. And I'm wondering whether the sell-off then still has more legs to run.
Hi, Taoleng. Always good to chat. The last time we spoke, and I said, the markets are a bit elevated.
Yeah.
And you said, and valuations are a bit high. And you said it was a day when global markets were in the green, and you said markets don't seem to think so. And I think this has just been a delayed reaction now.
Aha.
So yeah, valuations are relatively elevated. Maybe today will be a small bounce, but it's hard to say day to day what's actually going to happen. I think we have to look a little bit further out. I think let's look at earnings of businesses to try and look at what valuations are going to do. But I think relatively global markets have run quite hard this year.
Yeah.
And a pullback is only natural.
And I've been asking myself, is it a blip? Is it a pullback? What's going on? We'll just have to wait and see, Aheesh. The JSE also caught up in this sell-off, and I'm wondering whether, it presents some a buying opportunity at the moment. Are you buying the dip, Aheesh, considering that fundamentals in South Africa are also improving, supporting those SA Inc. stocks?
At this point, we were already invested in some of the shares that are presenting value now. And let's take the retail sector as an example. Mr. Price came out with phenomenal results the other day. Cash business, margins are quite stable. And on the back of the MPC cutting rates, I think it supports those valuations. And it's a lot of the shares that have been out of favor for a very long time that are seeming to show some value now. So yeah, I think if there's a lot of good quality businesses that are trading at relatively decent valuations that can be bought at this stage.
And sticking with those retailers then, Aheesh, we saw SPAR flagging, or rather out with an update this afternoon. Exits from Poland and Switzerland, putting it in a better cash position, right, as it's managed to reduce debt. Your thoughts on that update?
It's always tough when you have to write off businesses and exit geographies that didn't work out for you. But let's hope that the bad news is behind SPAR now. I mean, there are some improvements in South Africa, so hopefully that can sustain going forward. And it's not like they are without competition in South Africa.
Yes.
They have a lot of competition here, and they have to work hard to regain some market share.
And that brings me to my next question then. Can SPAR still compete competitively? You look at some of its competitors that are so far ahead. ShopRite really, taking everybody's lunch. Walmart also making an appearance in the local market and vying for ShopRite's market share when it comes to the delivery services, as it launched its own 60-minute delivery option for Walmart as well.
I don't think South Africa is a marketplace, especially in the retail side of it, where one business will have all the market share. So I think there's definitely a space for all these retailers in some way or form. And I'm sure in specific parts of South Africa, each retailer has their own value proposition. But it comes down to how innovative they are and whether they're able to retain the customer after they have captured them.
And I mean, we are a consumer that really likes to bargain hunt. So one will go to maybe 2-3 stores before making a decision to purchase. Let's shift focus to the mining space. And I know you said Jubilee isn't one you look at in particular, but maybe you can give us just a brief overview of that update that was out today, delivering a 65% jump in copper production in Q1. What's been interesting is those restructuring moves where it's now really exited South Africa and putting all its focus in Zambia.
Sorry, you broke up there in Taoleng, but I got a lot of what you said.
Yes.
I think, look, they've done well. They've done well. And I think it's left to be said whether this current trajectory in their production can be sustained. I think this is definitely a green shoot in the copper side of their business. And let's see if the execution continues.
All right, so let's hit pause on the conversation then. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
Yeah, Southern Sun came out with some results yesterday. Not spectacular results, but remember the comparable year was quite good as well. And the interim period is not the period that we're looking for. The busy period is the next 6 months, the 6 months that we're in at the moment. That's when they earn their big bucks. Utilization rates have crept up above 60%. I think that continues to about 65%. And there's a lot of operating leverage in there as they, continue to add, or they continue to utilize their latent capacity. So not cheap. It's a big property underpin. There's always a big chance that they unbundle the property from the operating company. That's happened elsewhere, and I think there's a big value unlock in there, and it's trading to quite a steep discount to what those properties are valued at. We talked about the cost of capital of the economy coming down with low inflation rates. If that were to happen, obviously your fixed property like hotels will be worth more as well going forward.
I am looking at the SA economy more constructively, as we spoke about the lower inflation targets. I think that'd be supportive of more volume for these retailers in South Africa, and we're likely to see that because they're in the lower value segments, they're likely to be defensive even if there was a bit of a drag in the economy. So I think it is looking like potentially a good investment at this point in time for the long term in South Africa.
Just touched on Mr. Price, but you can provide more insight on that. So like you're going with Mr. Price, and the other pick was Southern Sun. Your thoughts on those counters?
So I think both of them will benefit from this rate cut we saw yesterday, and seasonally, this is the time for Southern Sun where it makes a lot more of its profit than it does in the previous reporting period. So I think that investment case makes sense. And if you can recall, Mr. Price has been also my pick twice in the last 2 months on your show here.
Yes.
So it's also something that I follow quite closely, and I like the investment case, I like the valuation, and I tend to agree with Zwelakhe.
All right, let's get into your stock pick, hoping it's not Mr. Price this time around.
No, it's not this time. So this time it's Nike. Nike's everyone knows Nike. It's a global brand. They're in the midst of an operational turnaround. They're in the midst of repositioning their brand, and the short-term earnings has been under pressure as a result of tariffs and low demand in China, but that seems to be priced into the stock largely. So I think going forward, management has a good platform to execute their plan, and we can see earnings recover quite well over the next couple of years.
All right, let's leave it there. Aheesh, thanks so much for your time and taking us through trade at midday. Now that was Aheesh Singh from MP9 Asset Management.